Good afternoon, everybody. Sorry about that. Thank you. And today's session is going to be talking about the consideration of long-term care. We have certainly found that amongst many of the discussions with financial planning, insurance planning, planning to live is something that is starting to become a topic that has direct solutions and important reasons why that is coming to be. And that's what we're going to go through today. Basically, with financial planning, we often talk about death insurance on a regular basis. And certainly more of us are talking about critical illness. And a lot of us are not talking about long-term care. Long-term care has been around for about 20 years, and it is an important discussion for us to start having. But the problem is long-term care has been pigeonholed to either mean old age or completely incapacitated facilities, institutionalized. And really, it's not just long-term care insurance, it's just using different financial tools to plan for this risk that we're facing. And I'd like to start off planning with what if you live, not what if you die. Oops, sorry. This is why we're seeing so many of us have to consider what would happen if we do live? What if we live longer than we were expected? But there are really factors around us that are dictating that this is something more important and certainly much more impactful as we go forward. These are all the reasons why, if we don't consider discussion now, we're going to be reactive versus proactive, and we can't be. In fact, unfortunately, women are disproportionately affected by the need of long-term care, as well as the impact of long-term care by caregiving for others. I did a session a few weeks ago, and we had polled the audience just to say, how many of you have been a caregiver or someone close to you has been a caregiver? And the reality is every single time that poll is done, the ratio comes back almost the same at 85 to 95% of respondents say they have been impacted or affected by that. So we're just going to go through the reasons that you need to talk about this so that it's not just something new to consider. It's really going to impact us. And if we don't take control now, it's going to be too late. One of the big impacts that we're seeing, of course, is change in population and our healthcare system. And you can hear it all over the news about how people are living longer, and longer doesn't always mean healthier. But with this chart here, what you're seeing on one side is, we're living longer. I mean, there's no question, but women, if you look on the right-hand side, women especially are living longer. And those years are not always independent. Family structure. Overall trends are changing. We have smaller families, women are working full time. But based on what we're looking at, on this graph here, the main principle is the royal blue that is expanded in 2011 is single females. And why that's important is because single females are burdened with not just their own families, but generational planning. And on your own, it's just harder to plan. And it needs to be considered because the impact of healthcare is not free. Blended families cause us to look at different, who is going to take care of you later? I'm sorry. Blended families cause issues in future, children in later life. If we're having children at the age of 45, then realistically, they're only hitting 20 at 65. They're not quite independent. And if you started to need care when they're in those earlier years, how would that impact? It's going to cause something that you don't want to be responsive to, and a little bit of discussion and planning can go a long way. Change in family life cycle. Well, for as long as I can remember, financial planning has been based a lot on historical families or traditional family. Well, in today's day and age, this is a realistic review of how life can go. And it's not a negative, it just is what we can truly look forward to facing and getting through. All of these changes make us who we are, and we get stronger, and we're going to work through it. But if there was a little bit of planning earlier on, some of these dips don't have to be as impactful as they are. Before, if you look at many financial planning books, even to this day, it still says, start saving, have an emergency fund, put RSPs away, buy a car, buy a house, have children, and then retire for 6 years. And then but that's not the case. Most of us will potentially live in retirement longer than when we worked. Medical advancements, this is a good news story. And what this means is that we're living longer, as we talked about. But we can look at all the stats, and yes, it's great. But one of the things, particularly for women to pay attention to, is that the increase in life expectancy for women, unfortunately, was almost completely disabled years, which means that the extension wasn't that they were living a few extra years healthy and happy. Those extra years were requiring care, and that can impact their choices, their freedom, and just everything that they worked for their whole life. They took time to take care of somebody else, and then unfortunately, that extension, they didn't get to live the way that they had hoped. My apologies. Debt. This is a big discussion to have, and not that debt can't be used effectively. And I'm sure you're going to hear from many sessions today about using debt effectively, and it can be a part of your financial plan. But realistically, the goal would be to have much less debt when we're on fixed incomes, and when we can't, we don't want to have the impact of when we're trying to use our capital, that there can be risk that, debt's going to impact that cash flow. Well, realistically, right now, we know that more people are going into retirement with debt than they ever did before. And that's scary, because with that debt requirement, if again, care is needed, we can't just get increased income without affecting all the security, taxes, whatever it may be. So planning in advance to have an offset that's tax efficient is going to offset if debts are going to be continuing past, your income earning years. Where interest rates? Well, I don't have a crystal ball to know this, but I can tell you that interest rates are at an all-time low. I'm hoping that we're going to see interest rates go up, but for how long will it take? We don't know. And if you're in a point of your life where you're drawing on your money, low interest rates are going to impact your cash flow. And if you're at the beginning stages of accumulating money, those interest rates are affecting the growth of your money. So with this, there has to be something that has a solid base, something to make sure that you don't go above or beyond, so that if rates go up or down, you're not going to be dramatically affected, or at least you have an offset plan to ride through those peaks and valleys. This is probably one of the more impactful slides as it affects, and again, I don't want to say just women, but it predominantly affects women. Long-term care is not free to somebody. Taking care of your mother, your father, your brother, your sister, your spouse, whoever it is, you'll find that unfortunately our healthcare system does not provide 100% of care, especially the way that you may want to be cared for. This study was done with C.D. Howe. It can be researched. It was an excellent study that just showed, especially going forward, the red portion of that graph is showing private home care. Well, private home care is provided by loved ones. It's provided by people that do it for free, but it's not free if you can't go to work yourself. If you have 2 young children at home and you're trying to balance, these are things we have to plan for, and many don't want to burden their family, run out of money, and not have choices for their future. This is the probability of needing long-term care. It really is quite frightening to think of it this way, but each of these squares represents just a risk or an odd that we protect with insurance or some other means of proactive financial planning. The one that's almost all red, it's a 1 in 1.6 chance that you're going to need, or I'm going to need, long-term care at some point in my life. If that risk is so high, how can we not take the time to plan for it today? A small action today, all financial planning, any of the investment strategies, we're looking at taking time today for long-term effects and planning, whether it be with insurance, whether it be with separate investments. I don't care what it is, but it needs to be considered so that this doesn't derail what you've worked so hard to get to. It's disproportionately affecting women, and the true impact for you needs to be reviewed. It needs to be discussed so that you can have clarity and empowerment going forward. We have to plan to live, not plan to die. Dying is something that we're planning for others, but if you don't take care of yourself and put your oxygen mask on first, then unfortunately we can't help others. You have to take the time, and through today, we've seen some amazing women speak today. Work with someone, talk with a financial planner, and get your plan on track so that you know where you're at. Find out the options. Long-term care insurance is, in my opinion, one of the most misused tools we have available today to create an unlimited medical fund for life. Critical illness, I've paid more claims on that policy than any others. So there's so many options to consider. And I certainly think it's important for you to find out what is your best option to make sure you do plan to live. Thank you so much. Plan to live without compromise. Questions?